Hey traders and investors, it's Serge Berger here. It is 2 days left to go in the first quarter of 2015, and I think what's warranted here is an update again from sort of the macro, big picture, cross asset classes to understand where we are. My 2015 outlook is posted below this email in the article link, in the description link, I should say. Watch that one as well if you want to remind yourself what my themes are for the first half of 2015. But basically, I do expect more volatility. And so far, quite frankly, in the equity markets, we've seen some choppiness, but we haven't seen a whole lot of volatility just yet. So let's quickly recap and see what we're seeing from a cross-asset perspective. Of course, I'm going to use the basic ETFs here just for simplicity purposes. The TLT is a long end of the bond to treasury bond curve. And you can see basically the picture here remains disinflationary with price rising, yield well below the 2% mark on the 10-year note, benchmark note. So that's definitely not something that is very bullish for stocks, and at least not initially with the other things we're about to look at, in the sense that it doesn't speak towards any real inflation, and it certainly doesn't speak towards a whole lot of growth here. Otherwise, of course, bond yields would be going higher. Then let's look at currencies. Of course, currencies have been much in focus over the past couple of weeks. Let's look at the FXE. And by the way, this is all stuff we look at in the Steady Trader real-time trade alert analysis service every day. If you don't understand what's going on in the bigger picture, in the cross-asset perspective, I do think it's increasingly difficult to make money in equities trading. Again, and that doesn't matter whether you're using a fundamental or a news-based or a technical approach. If you don't understand what the major undercurrents or cross currents are in the markets, it's very difficult to get into high probability trades. Now, regardless of how well the technical setup might be, for example, in any given trade, it's just the world we live in at the moment. So FXE, again, this is just the euro currency, and you can see this is an absolute nosedive. The dollar currency. The dollar index, the opposite. So at some point, I suspect this will be a bit of a headwind towards equity markets. Hasn't been so far. Again, it speaks towards the resiliency of equities we have seen. You can then look at something like I think this is this is the commodity index. Commodities, of course, falling off a cliff here ever since topping out at a lower high in May or April. Let's call it the spring of 2011. More directly, you can look at oil. Of course, it continues to slid to another multi-year low. Today, as I speak, at some point we will see a fairly sharp rebound in this, at least for an oversold bounce. We just continue not to see it. It's also very disinflationary. Now, let's look at equities real quick, and that's really the main point. Look at the Russell 2000. Continues to be very, very resilient here, both for the bulls and for the bears, i.e. choppy. And that is something that's been making it very difficult for traders who are not just doing intraday trading to do much here. And I think some of the ones that have tried to trade through this market and force trades are certainly not doing well. They're not having a good month. Those of us that have been a bit more patient, understood the broader environment, we are happy just kind of hugging the flat line performance-wise year to date, which, quite frankly, I think in this type of environment is absolutely fine, if not good and respectable. The SP, I'm just going to look at the S&P 500 here, the actual index as opposed to the SPY. And again, it's the same picture here. You see, an index that, in many respects, also from a momentum perspective, is definitely getting tired here. There's a lot of reasons to believe that ultimately we will see a break below support here in this index, but until it actually does so, it hasn't done so, and that is the trick to this trade, which is to say remain patient. And that's really the main point about this current market here as far as equities go. So if you're interested in any more information, you can go to thesteadytrader.com and sign up for the real-time trade alert analysis services. Otherwise, if you got any questions, you can go to Twitter and hit me up there. My Twitter handle is steadytrader, and I'll see you in the next video.